Hello everyone, welcome to LearnStocks101.com. This is our free market video. It is Wednesday, August 6, 2014. I entitled this one Don't Chase. And what I mean, we've shown you over the last few days um, the volatility in this market. And you can see, you'll actually be able to see this better off of the ES, is off a 5-minute chart. You see right here all the, again, I said wild swings in this market, big swings. You see the bears were sucked into this down move in the opening of the ESs, or opening in the morning, early morning of the ES trading. And then right at the open of the market, we zoomed right up only to give some back and then trend sideways. So again, you're thinking we're going down, futures are down, everything's down, but all of a sudden, boom, all the bears that were caught short got whipsawed right there. So again, we'll talk about don't chase in a second. Then we go back to like a year chart on this one with the average true range. Well, we're actually going to go to this is what I showed you last night. We'll go back to the SPY on this one, and we showed you how the volatility increases by just showing another volatility indicator by average true range down here. As we get into down moves in the market, like right here, the volatility increases. On the up moves, the grinding volatility decreases. So what I mean by don't chase is that it's better in a market like this. Well, first of all, I'm talking about short term right here to be very clear, and very short term trading, because long term, I think medium term trading is sort of out of the question. Let's not go crazy and say out of the question. I mean, holding things, swing trades for a week or two are very difficult the way the wild swings in the market are. Uh, Longer term, just holding on the trend lines and stuff like that, that works very well because there are some stocks that really don't give a crap what the market's doing. And but short term trades, couple days, they'll work a little bit, but they'll work when you try to get it off of a swift move. And what I'm saying is, if you get a big swoosh down in something, go ahead and trade it off that bottom to the long side. Uh, Not that it's going to completely reverse course. And if you get a big move up in a stock or an indice that you're trading, trade it to the short side. Um, we're looking at Tesla for that tomorrow. Not that it's going to completely reverse, but again, you don't want to chase the moves down or up, because that's the kind of move, that's the kind of thing that happens. You get a down move yesterday, and then it comes down in pre-market in the futures, and all of a sudden, boom, right back up to the upside. So it's easier to buy the bounce or sell the rip or buy the dip in this case, and I'm looking more at selling rips. So the SPY is still holding up here. The key level here is this 100-day simple moving average. The Q's tested the underbelly of the 21 EMA again. The IWM, like I said last night, could still run up to this 21 EMA right here and still not be a chart that is fixed. Even if it gets all the way up there, could still be riding that trend line down. Uh, Bonds, we got into some bond calls today, but they were down off open. So everything the market sort of acted like they were on a given day, just on a daily basis. Most of the market, pretty much the markets were up off their lows, and bonds were down off their highs. But nothing has happened to any of these charts to either change the trend, the near term trend. The bonds have a decent trend over the last 6 months to the upside, except for this little move in here. But nothing has done. Even though the markets were up again today, the IWM hasn't changed the downtrend. Neither have the Qs in the short term. Neither is the SPY in the short term. So you just got to be very careful here. So I got some long setups and a few short setups to look at. So Goldman Sachs could be I look at risk in my trades. When I give a trade setup, I'm looking at risk. Doesn't mean it's going to do what I expect it to do. When it comes to a certain level, I look at risk. So this is a swing that I drew a Fibonacci retracement on from that low to high. And I got this zone right here, which should be, in theory, a lower high. Or, I'm sorry, a higher low. So as long as it holds this level, 167.5, you have a long trade here that could roll back up to 177.48. Now, I think the market will have a lot to say about this, but it's close to a base of support. And to give you an example of this, if I back this chart back out a little bit, let me see if there's another move on this chart that's very similar. So let me take. I'm going to leave that swing on. So we got a run here up to that level right there. So let me clean this fib up just to give you an idea of what I'm doing here, just so you're not like, what the heck's going on here? So this is the same kind of move that I'm talking about. It's not exactly textbook like the other move. We had a swing here that rode the 21 EMA up after it tested below it. So that's what I took as my swing right here. Meandered its way down right to that zone, actually violated a little bit because support and levels of resistance are absolute, not absolute. And then we got a close over high to low bar and made a move back to the high and even back to the extension that I showed you before in Goldman Sachs. So that's what I'm doing here. I'm doing the same thing I did off of this swing to this swing. Now again, the market was a little different mood right now. So just watch that 167.5 level on Goldman Sachs. Now Facebook, off some different type of fib levels that I have here. What you want to do with your trading right now is if you're trading, things are grinding a lot. Like I've shown you Amazon and Google over the past few days. They're not getting above resistance very well, but they're also not dropping down off the face of the earth either. So that's sort of what Facebook is doing here. It's not really going lower, but it's not really going higher either. It's basing at this 71.68 level that it broke above on the earnings report that was clear resistance over the past 6 months. So right now I'm looking for Facebook. I'm actually looking for Facebook on the short side. Again, market dependent. I get a move below this 71.68 level. I'm looking for 68.44 and then may possibly move back to 66. Now it could go the other direction. I get some kind of bullish signal here and a move over 74.51. Then I can jump back into trade looking for back to the first extension that I put on a couple of weeks ago, and then maybe a move to 83.55. But again, a lot of this is market dependent. Now Zillow, I just wanted to rehash from last night because last night I gave you the setup when the earnings wasn't really moving the stock. It was sort of still trading around 140, about where it closed yesterday. But now we have a move below, and it's the same Goldman Sachs idea that I just gave you. So we've violated this zone right here, as you can see, below 144. So again, if it can't make can't show any kind of strength tomorrow, and 144 does not, it still holds as resistance. This could trade back down to 123.5. Again, doesn't mean it goes the heck in a handbasket. It just means it goes a little bit lower. And I think again, like a lot of things, this is dependent on the market. But you're below a support level at 144. Target down at 123.5. Again, the risk on this trade is small. You put as long as you trust the levels, 144, $6 risk, $5.50 risk for a $15 gain. I got another one, First Solar here. Now that reported last night and actually was pretty bullish. So we had targets to the downside on a break of 60.70, which didn't close below of 57.51 and 53.38. So now that we got a bullish engulfing candle, I'm going to take these off for the time being and show you the levels that it needs to get through to start marching back up to the 72.68 level. So it bounced off the high, bullish engulfing, a lot of volume. You need confirmation tomorrow that this is going to continue moving bullishly. And it's a tough trade right now because a swing trade on this is off this. You got to take it all the way down to 60.75, which is tough. So watch the price action tomorrow. If we can get some kind of basing around here or above this 60 or 66.72 level that I've tagged right here, sometime around there, if it pushes through the higher one at 68.12, you're looking for a move to 72.68. Again, just putting another bullish trade on here. Not the easiest setup as it stands right now. I'd like to see a couple more days of price action. And then Wynn Resorts, I'm looking for this short based off of what Las Vegas Sands did today with a stop at 205.55. Looking for a first target of 193.50 and then a move to 186.29 and then 177.12. Because Las Vegas Sands, we had the same setup that I've been giving my members, but it sort of gapped right below our level today. That $70.61 level was our support. We were looking for a break of that to get to these two levels down here at 68.97 and 65.38. Sorry, 66.38. So it did that on its own. So now I have a radar watch on Wynn Resorts for doing a similar situation. Not saying it's going to gap like it did. It did gap down today, but support here again, 193.50. Now, you might not be, there's a lot of people out there that trade that would rather not deal with going short. They'd rather just deal with going long. So if that's the scenario you're in, that's great. That's fine. We all have our different trading styles. So when I say that I'm looking for something to the short side, you could say, okay, You can say, okay, he has targets down to XYZ. Okay, that's where I'm going to look to buy it. So like if this gets down to 186.29 or this 177 level, that's a place where I'd be actually looking to buy it if I wasn't short down to that level. I'd be looking for a bounce play there. Similar to the Zillow trade, I'd be looking to get a buy point at that 123 level if I'm not in a person who likes to short or buy puts. So again, I'm giving you these setups. Again, same with Facebook. If you don't like to do that and you see it breaking down through my levels, we have 60, 68.44 buy points and 66. I'm not saying I'm right all the time, but I had some back and forth with some people that really like the RAD chart recently. And you see the 1 year chart is absolutely immaculate until we broke this support level here at this 100-day simple moving average. And this was weeks ago. I gave this, once it broke down here a couple weeks ago, this is when I put these lines on my chart. These lines don't leave my charts. It held up at the first target, hit the second target today. Now this looks like a possible buy for a bounce right here. But when you get that kind of volume and that kind of serious move downside, there's something else going on. In those situations, I like to see some strength. So again, just to give you another example of how I like to do stuff and how it works out. Like I said, it doesn't work out every single time, but my targets are usually pretty darn spot on. And they can either be buy points or like I said, the buy points if you don't like to short, and short areas when I give you the targets to the downside. If you have any questions, keep them coming on the contact form.